All right, ladies and gentlemen, welcome back to another episode of the Market MadHouse. My name is Cyprian Francis. As with me, as always, founder of Madison Trading House, Mike Patton. Good morning, Mike. Sorry for the delay, everyone.
Yep. Yeah, sorry for that, guys. Just was finishing up doing some research, so we're all good to go.
So where do we want to begin? I feel like the markets got hit pretty hard yesterday. They're
Yep.
getting hit pretty hard today.
Yep.
We got some PCE inflation numbers tomorrow. What are you seeing on your radar, Mike?
All right. Well, the hit yesterday that was a little bit unexpected, I would say, but there's not a lot of good news out there. So every time the market goes up, my instinct is that it's going to come back down. So I would say, in short, expect that we're going to have more downward pressure. We don't have any real justification for a strong uptrend. Most news that we're seeing is recessionary at best, or leading to recession. Now, Chairman Powell did make some nice, friendly comments that said basically that he sees a way to get the economy down to target 2% inflation without causing recession, etc. But the reality is this: the Fed has used their ammo. I mean, they've used everything they got, and at this point, I think anyone expecting that the Fed has the solution to all of our problems is deluding themselves. The reality is that we've got too many issues going on across the globe, and I kind of want to jump into some of those. So first, China lockdowns are still an issue. They have eased again, but remember, they ease, then they go back, then they ease, then they go back. Um, Basically, China is committed to the zero COVID policies. And as of right now, that zero COVID policy is not working to where they can just extinguish it. And I don't think it could ever work, practically speaking, without constantly going back and forth to lockdowns. Every time someone travels to the country, I mean, they're quarantining, et cetera, but that's not going to be enough to stop the spread. So, in short, their policy is what it is, but being able to pull that off over long periods of time, not likely. So their policies are firm, and oil prices surged. We did see oil prices jump up once again, well above $100 a barrel. Um, Oil is going to be very volatile. I've said this before. We can expect it to stay above $100. When it sells off, it'll come down to about $100. When it goes up, it'll go up above 110 at the higher points, maybe even higher. And the reason being is because the situation that we have isn't changing. We don't have suddenly we snap our fingers and suddenly Saudi Arabia and other countries can suddenly produce more oil. It's not working that way. I mean, even in the United States, we have spare capacity, but to bring it online, we actually have to start drilling again, turn on the wells, etc. So these things take time, and with the demand still there, which is different, like we can see that the economies are slowing down, but we're still seeing a lot of demand. And now we're going to summer and we're seeing even more demand. So I think realistically, we should expect oil prices to gradually move into a higher range. Right now, they're in the 100 to 112, 115 range. I do think we're going to start seeing 110 to 120, 120 plus range coming up as we progress through the summer. So that's going to continue to put pressure on inflation. Food prices are up, and they probably won't go down. In fact, I didn't put this in the notes here, but General Mills had earnings this morning, and they said that part of the reason they had higher profits was because prices went up for the goods they're selling, even though their sales amount, like the number of products they sold, went down. So if you got that combination, it's like, well, we made more money, but we're selling less product. It's only a matter of time before that's going to catch up. Where now, even they said it's like, well, our costs keep going up, so therefore, there's no way possible that we can expect that this situation is really going to lead to a much stronger profitability over time. So it did for now, but as everything catches up, eventually that's going to eat away at their profits. And I just think that the telltale signs so far is that the U.S. dollar strengthened. um, Whenever the U.S. dollar gets stronger, it's pretty much a sign, because think the U.S. dollar is a global reserve currency. For those who don't understand what that means, it means that things like oil are priced in dollars. They're not priced in yen. They're not priced in yuan. They're not priced in euros. They're priced in dollars. And there's a reason for that because the US currency is used as the standard. It's the reserve currency, and that's been the case since the 19 what late 1940s at least. So in short, um because investors like to put money into US dollars when they cash out of things, there's a tendency for demand for dollars to pick up whenever people are selling assets. And that basically is the case also if it's domestic. If you sell shares of stock, what are you selling it for? Dollars. So dollar demand basically means that people go into cash, and that's what we're seeing a lot of. So that means that investors are liquidating, and the markets are proving that. We're seeing prices come down for equities. So therefore, we know people are selling. So if that's the case, that just lends more credence to the notion that we have a clear signal from the investment world that they're not expecting this miracle turnaround where everything's going to be fine. People are eyeing recession. It's no question about it. I think the question isn't whether or not we're going to be in recession. I think the question for the investors is how deep it will go at this point. So for now, I would say the writing is clearly on the wall. It would just be prudent for everyone to acknowledge that and see what we can do, hopefully, to avoid the consequences.
Yeah, and that's why I brought up that PCE number
Yeah,
tomorrow, because I feel like if there's an improvement that could kind of help weather this storm that we've had over the last 3 days of kind of a sell off, but everything
yep,
you're touching on makes sense, right?
yep,
Um, and so cool. But that's why we have the Madison Trading House software, so that in these down markets, we can still find opportunities. And
right.
so that's the whole reason we have this show. That's the whole reason we do these clips and these videos, is so that we can still find opportunities. And so last week, well, I guess before we touch on anything we did last week, do you want to get your screen on to the platform there, Mike? I don't think I see you logged
Oh,
in there yet.
all right. Yeah, I
It's
just
just
realized I didn't
me.
turn it on.
But
1 second. Let me turn that on here. There we go.
but what I was gonna say is this morning the FOMC chairman and I think some of the other Federal Reserve heads from the world were speaking. Did anything come out of that chatter?
That's the thing. Like it's such a repeating record. Like it doesn't matter how many different ways congressional people or whoever ask these questions. Like, what do you think about this week? I mean, I'll give Powell credit for one thing. He doesn't seem to pull punches. He just says it like it is, and I like that. I actually like the fact he's not trying to be too. Well, let me just dance. I mean, like Janet Yellen, she's a secretary, the Treasury Secretary now. She dodges and dances around and tries to make things sound good. Powell just says, "Look, we don't have a solution." he just,
It's
he
not
just
our
puts it.
department. We don't
Yeah,
make
yeah,
the laws,
right.
right?
So I gotta love the man for that. Like at least he's not trying to pretend he's someone he's not. But I mean, that was what I mentioned earlier. He did say that he believes we can get back to 2% inflation without destroying the economy, because that's the big fear that most of the Wall Street people have is simple. When you look at it, one of the most direct ways to bring down inflation is to cause recession. I mean, it's true. Like if you cause recession, things slow down. They have to. But he's basically saying that's not the plan. That's not what we're trying to do. We want to gradually, improve things, etc. But I also think that he knows as well as I do that there's only but so much control he has over that. So if affecting the financial markets, yes. I mean, the Fed can definitely move financials, as much as they move their interest rates in their monetary policy. So he didn't say anything that impressive, neither did any of these others. They just basically reiterated what we already know. But the one thing that I do find a little frustrating, but I guess it makes sense, is that they still consistently seem to underestimate or try to play down the probability of recession. They seem to be like determined to make it seem like, it's not that big of a deal.
Well, that's what
But
we want them to say, do we not? Right? We don't want
yeah, I
them
mean, that's what I say. Everyone wants
to.
us to lie. I don't know why we want that because I mean, it's to me, it's like if you know that you're about to crash. I mean, does it really make sense to say, well, it's not going to be that bad? I mean, it's kind of better to prepare for it at this point. I could see earlier where there was a better chance that it might not happen, but now it's like, yeah, we're heading there. So yeah, they didn't say anything that impressive. He just kind of reiterated the same stuff we've heard before, except added that little note that he sees a path to success. But I would take that with a massive grain of salt because I don't think anyone can realistically say that at this point.
Sure. And so that was kind of the big news of the day so far. Nothing came out of it. It was just kind of on the calendar.
Right.
Other than that, I've been seeing some chatter around Tesla and
Yep.
even Spirit Airlines, which are two names that we covered last week. So
Yep.
it sounds like we've got some updates there.
We do. So on the Tesla side, Elon Musk, of course, he laid off some people. Lawsuits came out because of that. We discussed that last week. And I've also seen like they're making a big spectacle of this. It is absolutely true that Elon Musk is definitely a target of media. They love the rag on him, and since he does tend to run against the grain politically, especially. I know that that's one of the reasons why they like to throw shade at him as much as possible. But with that said, Elon basically kept bringing up bankruptcy. Like he was in this interview. I didn't see the interview, but I saw the transcript of it and the notes on it. And basically, he mentioned bankruptcy a lot. And not personal bankruptcy, but for the company Tesla. He's like, yeah, car companies, they're always like on the verge of bankruptcy and they're always like steering towards bankruptcy and you have to counteract it. So he's talking about how he's got to, what Tesla's going to be able to have to do in order to avoid bankruptcy. Tesla and Ford are the only two American companies that never, car companies that never been in bankruptcy. He just kept going on and on about it. And a lot of people noticed that and they're like, is he telling us something? Is he hinting at something? And my opinion is yes and no. He is hinting at something, he is saying something, but at the same time, I think what he's trying to do a little bit of damage control because I know the layoffs definitely are a bad PR thing. Tesla is a company that is strongly driven by customer loyalty and perception, just like Apple. So if it's not like a company where you feel like you do business with them because you just have to, you have no choice. Tesla, you have a choice. And for that reason, I think that Tesla is, they are definitely, Elon Musk definitely wants to make sure people still feel strong about the company and people still love the company. So I think that that's a little bit of damage control just to keep talking about the fact that we have to take aggressive actions to protect ourselves. But he did mention a lot of key things, the supply chain issues that are going on. There, he says it's been a nightmare. Basically, he said that his plant in Austin is losing billions. The plant in Berlin is losing billions. These are both newer plants, but he's saying they're losing a lot of money. I think he said they're like money burning factories or something like that, some term like that. So typical Elon hyperbole. But basically, he said that the main focus on Tesla right now is to make the factories more productive, essentially, so that he can afford to pay people, by producing goods and services on schedule. Whether or not that's going to factor into Tesla's price, I don't think it's going to have that big of an impact because I think everyone's already figured this out before he said anything. But I would say that Tesla probably is still in a good buying point. So going to the chart again, just for the benefit of those who didn't see it last time, Tesla has very solid fundamentals still. It's still in the green on that. It's still in the green on valuation. So this is a very attractive stock, and they are still likely to do another stock splits, which will make it even more. This is for this particular stock. Split is a really big deal. People tend to chomp on Tesla, bite on that whenever the price goes down. Um, Institutions are not doing much with it. It's very neutral on that one. We still have a yellow inner circle. Technicals are flat. It's not really going anywhere. So I would say overall, we're probably in a range right now where Tesla is a decent prospect. It is trading under $700 at this point, so we could get down to the low, to near 600. But when you're thinking about Tesla, $100 range is not a big deal. I mean, this is it typically trades that far up and down. It's significant in percentage, but that's what you have to expect. Tesla's a very volatile company or stock, so I still think they have a good value proposition for the longer term players. Short term, probably not going to get too much out of this. Even if you're day trading it, probably not going to be able to do all that much since it's just trading fairly normally. So
Yeah,
in short,
and
yeah, it
well, I
looks like
was
an opportunity.
yeah, and I was just gonna say that a lot of their problems are a lot of the same problems that a lot of companies, global companies, are having to deal with.
Yeah,
So it's not so specific to Tesla.
right.
But if you do watch that other video, you do go into, I'll post it in the chat. You do go into a little bit more detail on why over time Tesla looks like a good buy.
Yep,
And so I recommend everybody watch that. Also in the news is Spirit Airlines, right?
yep,
And I believe that one of the offers was increased going
yep.
into a vote. I think that's what the headline news was.
Well, actually, two offers, both offers. So Frontier and JetBlue are literally in a death match to get to get Spirit. I mean, they're fighting hard. Like, and a lot of commentators have said they haven't seen a battle like this in a while. So this is like the heavy. I mean, this is like a championship fight right here. They're just going at it. So each time one improves their bottom line offer, the other does. So for Spirit, they can just sit back and watch, their offers getting better and better. And that's actually one of the things I expected, that the more it's like up in the air whether or not the shareholders are going to vote or not, the higher these offers get. So they're sitting back just waiting to see who finally says I'm not going to offer anymore, and then they'll probably take that deal, the one whoever's left. But so here's how it changed. I was reading notes here on the other screen. JetBlue, they raised the reverse breakup fee. The reverse breakup fee, by the way, folks, means that in the event that the merger is blocked for regulatory reasons, like antitrust, whatever. Okay, if that happens, they basically are going to pay a fee to Spirit in compensation for that. This is a common thing whenever there's a chance that a deal might not go through. Because remember, once you go into this process, there's a lot of things that happen legally, et cetera. You basically are preventing your company from being approached by anyone else. You also have to put out cash to pay for all the legal stuff. So basically, if it doesn't go through, you got a bill to pay for your legal, and you probably lost some other opportunities that may have come along the way. So, in short, and also your stock price tends to be suppressed because people know that you're about to get bought out. So, why buy the stock for any higher than the price it's already supposed to be bought out at? So, opportunity cost basically is what they're compensating for. So, they said they're raising it to 400 million. The previous one was 350. Okay, so JetBlue increased that, and they also increased the amount they're going to pay in advance, which is this is actually a very unusual thing. Like usually you don't see this, from my experience. They're going to actually pay money like as soon as the deal is agreed upon. They're actually just going to say, "Here's some money, 250 a share." Is what they're going to pay out, up from $1.50 a share. And they said that's going to be added to a 10 cent a share monthly payment to shareholders starting next year until the deal is consummated or terminated. So basically, they're going to be paying all the way through, whether the deal actually happens or not. Like if it gets blocked, they're still going to be paying the entire way through. So this is a pretty nice. That's a pretty nice setup. Um, and basically, let's see. The other one was Frontier. Frontier raised their cash portion of its offer by $2 per share to $4.13, and they increased the reverse lockup fee to 350. So they're behind. So basically, what happened is Frontier raised their reverse breakup fee to 350 to match what JetBlue did. and then JetBlue turned around and raised by another 50. So it's like they're playing a game of poker here. Like it's like, oh, okay, I raise you again. See if you can stay with me, right? And for the cash side, JetBlue's the only one doing an all cash deal, which I would say if I'm an investor in that stock, I will go for the all cash deal all day, every day, because you never know what's going to happen when you do a cash plus stock deal. The cash, you know how much that's worth. The stock may change in value significantly between now and when that deal is actually consummated. So, what if you agree on a deal and then all of a sudden, a year later, when the deal is finally finished, front uh, Spirit's price, or sorry, Frontier's price per share goes down because maybe they made some bad decisions or maybe their earnings don't look so good. So cash is cash. Take the cash. I mean, and I think that's the thing. I'm expecting most of the shareholders are going to want to take the cash deal. And they are voting on Thursday, this Thursday. They're going to vote to decide which deal they take. So let's go back to the chart here so we can look at this. So if we're looking at Spirit, right now, it's trading down 3.11% at 22.11. So if the deal goes through, the price is going to pop. Sorry, what was that buyout price again? Oh, I forgot the
30
notes.
some 30
Yeah,
something.
exactly right. So basically, you have a lot of upside potential. Okay, so this would be something, since they're going to vote on Thursday. Basically, if you buy the stock now, and come Thursday they accept the JetBlue deal, then we should see the stock price jump quite a bit. Now, there is a catch to this, and I keep emphasizing that the market does price in probabilities. If the market doesn't see a high probability of the deal going through, even if they accept the JetBlue deal, then the price is not going to go up quite as much as it would if they were certain. Like, in other words, when Twitter's deal was announced, the stock actually went up pretty quickly, and it went almost exactly to the or close to the price that the buyout deal was supposed to take place at. But that was because the markets believe it was a high probability that that deal could go through. Well, of course, now we know that's not as high of a probability. But as far as this one is concerned, there is a real serious concern about the government blocking it. So therefore, it might be a muted response. So if you do this, just remember that it may not be as impressive as we might want, and we'll have to basically factor in the potential that that deal might not go through. As it stands right now, the board of directors again have favored the Frontier deal. So that's the deal that they're pushing for. The investors, however, will see what they think. So it's a nice opportunity. If you're willing to take the risk, this is one of those you can do. But remember that once it comes out, if it comes out as the Frontier deal, not the JetBlue deal, you're not going to see as much of a response. I don't think the stock's going to drop like a rock or anything like that, but I think that you're just going to see um, that you just held your money for a while, nothing much happened. So we'll see.
Yeah, and it looks like we're down 3% today, so it's kind of catching that breath down, and
Right.
the logic makes sense there, right? So you could do a little options play here. Although I think we went over the options last week, saying that it's already kind of priced in there.
Yeah,
Uh,
options usually price it in, and but there is a way to do options, but it would be so complicated to explain that we wouldn't have time to do it in a podcast. But the point is, there are different ways to do this, but we do, for the people I have in our classes for options training. If they want to learn advanced strategies, I can show them some very effective ways to trade a situation like this, where you can very sharply define your risk. If it goes your way, it's going to be a pretty big win. If it doesn't, you can keep your risk to a minimum. So to me, it's like if you lose a little bit of money, but you could have made, five, six times that amount, and you still could be in the stock that's, it's not like Spirit's going to disappear tomorrow. So you can still have the stock and potentially make some extra on the side with it if that deal goes through. So for those of you who take the trial of our software, obviously be sure to ask us about that. I can give we can give you an explanation of how those programs work.
Yeah, and so for anyone that wants to get a trial of the software, I'm going to go ahead and drop a link into the chat right now. You'll get full access to Madison Trading House, an awesome analytics, stock analysis, scanning tool. There's so many different features, and so during this part of the show, what we usually like to do is find some names that maybe some members or some students have their eye on, or something that we have seen opportunities in, and we like to go through the software to showcase the power of it. And I believe, let's get started with one that, I think most of us are familiar with, and that's Nike, and ticker symbol NKE. What's the story there, Mike?
Okay, so a lot of you were asking me about a lot of the members were asking about Nike, and I'm not sure why, but a lot of people were asking about it, and it's down a lot. You can see this is a 6 month chart, and you can clearly see Nike's been on a decline for some time. Although this is not unusual, probably most stocks look this way at this point. If we look at it from this chart, we have it on a longer time frame, so you can see that we did see some appreciation in price going all the way up until the beginning of 2021, at which point it turned around and went negative. But again, this is not unique to Nike. This is what pretty much every stock looks like. So the question I've been asked now, one thing about Nike that you can kind of see on this chart is that if I were to draw a horizontal line, which I guess I'll do right now, let's do a horizontal line. If I draw this horizontal line right there, I want you to notice where we're at. So that peak right there, just before that sell off, that was the pandemic peak. So right before the pandemic first hit, that was the peak that Nike was at, then it dropped off. Okay. Now, if we look at where we are at the present, we're presently trading right at that peak. Now, it is critical for any stock, and this is not just for Nike, for any stock that's been up since the pandemic sell off. If it's going above the high that it was at just before that sell off, that price coming back to that high before that sell off occurred, that's a critical price because that's where things got reset at first. After the pandemic hit, they reset lower, then we traded up based on whatever expectations the markets had about future growth. Now we're coming back to that, so that symbolizes a couple of things. Number one, it symbolizes that the markets are basically saying that the 2 years since the pandemic started have basically been a wash. They have not shown any progression that we think is going to be lasting at the moment. Otherwise, prices wouldn't be back to there. Um, so in short, this is a critical area where we probably will see some potential buyers come in. So far, as it's been hitting this level, we've seen that it's hit it multiple times, and we've been able to hold up so far. Doesn't mean we're going to keep holding up, by the way, just because it's held up before. Unless we move away from this and get far away from it quickly, then that means that the probability is higher the more times we come back to this that we're going to breach through. And if we do, now it becomes a question of how far down. So I think a lot of people have Nike in their portfolio or were thinking about buying it and they're wondering, is now a good time? So let's look at the numbers really quick. On a fundamental basis, Nike looks great. Okay. Fundamentally, it's solid. It has good upside potential. The median analyst target is 152.50. That's a 50% gain plus over where we are now at 103. The upper target is 195. The lowest projected target for Nike is 122.10, which is almost 20% up from where we are now. So, by any standard, right now, the projected upside is significantly greater than where the price is at the moment. If we look at the numbers, we don't see that strong of a picture as far as growth. But that's not surprising. Nike's a very large brand. It's been around forever. It's very difficult for more established companies to keep growing. So if you are established, you see your sales grow over time, even if you're a very established company. If you're not seeing that, then that's a problem. So Nike sales are growing. They're up about 1.1% gross. However, the net income is down negative 0.86% on a trailing 12 months basis. So they are losing some steam. If I look at the earnings projections here, we can see the history of earnings on a quarterly basis. These lines basically tell us what the earnings were. So if it's going up, that means earnings are growing. Currently, the projection for August is up above. I'm sorry, the projection for the earnings that will be reported in August, I meant to say, which will be for the second quarter of this year. Currently, the projections are higher than what we saw for the first quarter reporting, but um, I'm sorry for the third. Wait a minute, the third. No, so it would be the second quarter. Sorry. Just making sure I was reading that right. So far the projections have been going down. These histogram lines that are getting shorter basically means that projected earnings estimates are declining, diminishing as we go forward. So that's not a great sign. That usually means that people are looking at some other data and they're seeing reasons why the company might not do as well as they originally thought. And if we look at it on a yearly basis, Nike is showing some growth. So 2023, we're expecting to be a decent year. 2024 is expecting to be better. So we're expecting earnings growth, but at the same time, we are seeing some declines in the valuation or the projections. You can see those declining histogram lines. That basically means that each time we reevaluate, the analysts are projecting lower for the earnings. So in short, Nike like your typical well-established company where it doesn't show a lot of potential for growth at the moment. It does have a good projectile from analysts, but I would take that with a little bit of a grain of salt because I think that a lot of these estimates are going to be recalculated forwards. But as it stands now, still is a consensus larger potential upside. But I would still say don't buy it just yet, and here's why. The one stat that I don't see in red is the circle. Everything else, there's ways to deal with that, but when that circle's in red, that basically means that you don't really see a lot of interest from institutions at the moment. Nike's in 35 fewer top 10 lists than it was before. So we have currently 62 um, uh, funds where Nike's in their top 10 holdings, but that's 35 less than what we had before. That's a huge drop. So that's basically a third of their, um, their people that were holding in top tens. We have ownership down by 1.29% for institutions. Institutional ownership is currently at 58.56%. So this is primarily a fund driven stock. It's mostly owned by institutions. We have 295 fewer buyers and 320 more sellers, and that adds to the 1294 sellers that we already had and 930 buyers that we currently have. So I mean, this is not looking so great as far as that goes. So I would wait. The money flow is turning positive right now, which probably means that some institutions are starting to bid, but we won't know that for sure until they report, which usually only takes about a week. So I would just say keep this one on the radar. But if we don't see the follow through where we see confirmation that institutions are actually accumulating more shares, we don't see that, then wait. One of the things that's very important in this game of trading and investing is to be patient. If anything's that good, you'll get a chance to get into it. Nothing's just going to instantly go to the maximum value. So, judging by the upside potential, the analysts have already said, if we miss $5 of that move or $8 of that move, but you go $50 in your favor, are you really going to be thinking about that $8 at that point? Whereas if you get in too soon and they still are selling, then you're going to be down $8. So I think it's better to miss out on $8 of profit but be in a solid position from the start than to have to drudge through all the declines first and then you suddenly see the stock go your way. Opportunity cost is a big deal, so you want to be in stocks when they're ready to go, not when they're still thinking about it.
Yeah, and I was when you were doing the initial analysis there, I was like, I feel like the insider score is really important here because you want those funds buying in, and even that $100 is a pretty psychological level. So,
Right.
give it a couple weeks, play out. Fortunately for Nike, it's one of those products that people are always going to be buying. So,
Right.
you know,
Yeah, it's not going anywhere.
they're becoming one of those legacy companies, right?
Agreed.
All right, cool. Another company that might be feeling some of the heat from the economic changes is Google. And
Yep.
I've seen some ad spends and ad budgets start to become a little bit more conservative. So I would assume that that's starting to spill over to some of these names, such as Google.
Yeah. Oh, sorry, I put Graco, not Google, on accident. One second. Let me get rid of that one. GOOGL. Here you go. There's Google. Okay. So Google's stock price is obviously down, but again, this is typical for most companies. Google still has solid fundamentals. We can't argue that, but let's look at the numbers just to get that into perspective. So, to add to your point, you're right. We're seeing net income down 1.96%. So, budgets are definitely being trimmed on spending on Google Ads and other services, or else we wouldn't see that. So, that's definitely a fact. Revenue growth is still up. It's up 4.93%. But remember, folks, that money that's coming in does not equal necessarily profits. It all comes down to your net income. So the money's rolling in, and that's a good sign. They're still seeing growth in their revenue. You definitely want to see that in a stock like Google because that means it's a growth stock if you keep seeing substantially increasing revenue over time. But converting that into profitability is another story. And right now, it seems like their profits are flattening out. And that means that that's going to put some pressure on the stock to stay where it's at or potentially even go a little lower. If we look at the projections, this is actually telling the tale. These are the earnings that we saw for Google on a yearly basis. So here's 2014, 15. You can see these lines are getting taller, which means their earnings are getting bigger. 2021 was a monster year. I mean, you can see how much money was brought in. And this is net income. This is not gross. This is what they actually pocketed. It beat expectations. It almost doubled the previous year. And now we're looking at 2022, and you can see the height of this is almost exactly the same as the previous. Now, here's a little tip about investing, guys, and looking for growth in stocks, at least in their value. If earnings are projected to be the same next year as they were this year, that's not a case for a stock going up. And a lot of times people confuse this because they're thinking, well, the company's making money, everything's going well, the fundamentals are good. So how come the stock's not going up in price? It's because what moves the price of a stock up over time is growth in earnings, growth in revenue. We have to see things get more money coming in, more profits being made. If your company is not doing that, that flattens out the trajectory of the stock price because people are already trading the stock now based upon expectations of what's going to happen to it in the future. They're not trading based on the number that came out today. They're basing it on what does that number say about what to expect in the future. So you can't really say how far in the future. There's no like book I can read and says what Goldman Sachs or JP Morgan are basing their assumptions on right now. They don't tell us that. But we can know what factors they're looking at. And they're definitely looking at the numbers. They always do. So if the numbers keep growing, you can rest assured that stock price is almost certainly going to be going up. But if the numbers are flattening on the net profit, that doesn't mean the company's bad. It just means that you're not justifying the price rising from where it is now. So now it becomes a hold instead of a buy. Okay. And if the numbers really start to deteriorate, where all of a sudden if the sales numbers start to flatten out, that's when you're likely to see the stock price start to go down. So for right now, all this happened is the market has trimmed off the top of Google's price expectations of future growth based on the realities that we're seeing now with inflation, slowing down economic activity, etc. All those things were not on the agenda as far as what people were thinking a quarter or two ago. Some were, but not most. Well, 2 quarters ago. But as we come into this year, obviously, if the stocks come down, people have been projecting that profitability is going to decline. So that's why the price is where it's at the moment. So if we look at it from a valuation perspective, yes, we're in a great valuation right now for Google. Price to earnings is good. Trailing price to earnings is good. Price to earnings growth is good. That peg, by the way. Price to cash flow is good. Price to sales is good. Price to book is in between. And if we look over here at the alpha beta, um, beta means how much the stock moves in comparison to the regular market. The higher the number, the more the stock price moves. And if your alpha is positive, that means you have a stock that moves more than usual and has better returns than what we see in the regular market as well. So it tends to actually go up. So Google, of course, has reasons to go up over time. It is a growing company. So if we look at its chart over the longer term, I mean, there's no question which way this thing has been going, right? So right now, it looks like we're kind of stuck in mud. We're not seeing a stock that looks like it's in trouble. It doesn't look there's much reason to expect decline. Compare this to Nike. When we looked at Nike, it's right at the peak that we saw at the pandemic. So where'd my line go? At the pandemic sell off, right before the sell off. So that peak, we're still well above it. We've come back, but we're still well above it. So I think that this is a company that's, if you're going to be in something that's probably going to be stable for a while and then maybe go up later, this is more likely a better choice. But it still has the same problem that we saw with Nike, and that is we don't see people buying it right now. I mean, this is money flow is negative. People are selling Google overall, both by the volume of shares and the number of trades over here. So that's the money flow. Money flow just tracks buying activity versus selling, and it also looks at trades, buy trades versus sell trades. And in both metrics, we're seeing more negative than positive. And if we look over here, institutional ownership is down 0.4%. It's at 32.10% presently. Of this, we have 1,600 buyers still left, 220 fewer than we had before. We have 1,879 sellers, 401 more than we had before. But we do have it in 48 more top 10 lists, kind of illustrating my point that it does look like some people see this as an attractive stock, but it's just not going to move right now until we start to see those institutions kick in. So I would say if I could put them on two scales, Google definitely looks better than Nike right now. Also, Google probably can convert better, as far as sales wise, because Nike has to worry about supply chain issues and things like that. Google, not really. Supply chains affect everything, but Google much less because it's basically an online entity. So much
Yeah,
better able to survive.
and Google is a lot bigger than just Google search these days, right? Which
Right.
is why they're Alphabet. They got their hands in so many innovative fields, and over time, that's probably why it tends to be a good growth stock, because they are actually innovating in new industries and things like that. So,
Right.
um, great analysis. We'll keep an eye on that. As always, if anyone has a ticker that they want Mike to run through, feel free to drop it in the chat, send over a message, and we'll see if we can get it onto the show. Let's wrap it up with one of the features here that we've discussed a few times, and I'm actually interested to know how we can do this on the Madison Trading House platform. But we keep mentioning that, oh, when institutions buy, when institutions come in, so how do we use the software to tell us when these things are taking place?
Great question. And this will be very quick because it doesn't take that much effort to do it. So let's just look at it for right now. So we have the screener, which is the more detailed way of looking at stocks. We can filter out all sorts of criteria, etc. But if I want to just get right to finding something right now that actually shows an improvement in institutional activity, here's all I have to do. I go to find and I go to scans. And once I'm in scans, I'm going to click right here on the score. Then the score remembers those boxes that we have: the technical, inner circle, valuation, and fundamental. Those four boxes make up the score for the stock based on whatever criteria the software is able to detect. Now, what if we were to look for something that had a positive change on its inner circle score? So I'm just going to look through this list to find it. So here it is: inner circle score positive change today, right? So there it is right there. Now, all I have to do, we also have inner circle score negative change today in case we're looking for the opposite. So I click right here and it shows me that there are 100 stocks on this scan so far, at least 100, that had a positive inner circles change. So I click on there and it's showing them to me. Now, when I look at the score, remember it said a positive change. It doesn't mean that it went green. It just means it improved from whatever it was before. So unless there's a glitch here in the software, which I don't see, I should see either green or yellow for the insider score, and that's what I'm seeing: green, yellow, etc. So now that I see these stocks, I can now individually analyze them. I can also create a watch list that I can put a group of these stocks on one watch list and look at the criteria separately. But let's just do this for right now, and I'm going to sort simply by the volume. I'm going to look for the higher volume stocks and then see what they're doing. Now, I'm going to skip the ones that have these gray boxes because usually that means it's an ETF, although it could also mean that the stock is fairly new, so we don't have enough data to do the estimates. So we need to have a few quarters at least of data to be able to score fundamentals and valuation. So either they're if they're ETFs, they don't have those criteria because they're ETFs. So let's just look at some that look decent. So here's JetBlue. We just talked about that today, so let's check it out. So here's JetBlue. Now JetBlue is neutral in the chart. You can see up here that although it's been down for months, right now it's kind of going flat. So not a real trend up or down there. In the last 1 month or so, we just kind of basically been going sideways right here. If I look at the valuation, it's not that impressive. We're kind of in the middle of nowhere. Some numbers are good. Price to book is good. Price to cash flow is good. PEG ratio is not. P ratio is not available at the moment. But as far as inner circle, slightly more ownership, but so that does turn to green. Money flow looks like it's been positive. So we've got some things there, but um, inner circle is the only one that's turning green, right? So let's take a look at what's going on. So I can see that we have a 1.5% increase in institutional ownership. We have 66 fewer buyers and 66 more sellers, and we're in two fewer top 10 lists. So it doesn't look that fantastic. But the point is, the software detected that when it added up every detail, including money flow, which we do put a much greater weight on that because this tends to be a leading indicator of what we're going to see here next. So, in other words, the institutions buying, we can't know that they're buying at the moment, but we can see the volume of buying versus selling. We can tell there's more buying activity than selling, so probably someone big is getting in. And then eventually it shows up over here once they report what they did. So what I did is I just found JetBlue as a potential stock that I could look at as a potential buy. Now what I'm waiting for is to see the actual play out, the stock do what I'm expecting it to do. So if the institutions are buying it right now, then what we should see is an uptrend start to emerge if they keep buying, if they buy enough. So if they're buying enough and they keep going, eventually that trend's going to start to turn up. And then at that point, we can look for a buy. And let's just see if we can find anything else just while we're on it. So let's see. Here's another one. Goro. I don't know anything about this one. It's a low volume stock. But looking at it, this one did have a positive change, Gold Resource Corporation. So it looks like we got a little bit of an increase in institutional activity, not a huge amount, 0.49%. So this one looks like we had a positive change, but it doesn't look like it's that dramatic yet. So maybe we can look at that later. But JetBlue definitely looks like a stronger one. So what this is simply doing, folks, is that although it may not look like that big of a deal, what the big deal about this is, and we can actually look at some ETFs too. So let me just go to this one. This is a bearish ETF. Okay, so that's up. Let me try this one here. This is a different type. First TR ETF. I don't know anything about it, but looks like buyers are starting to come in on this. Institutions love ETFs too, so this is one of the one of the places you can actually find a lot of opportunity. And here it is. Look at this. So on the 24th, this is the buying versus selling, and I don't know how that's possible, but it looks like they just stomped the buy button. I mean, they must have been crushing the buy button on this day. And this is not a very actively trading stock. It looks like the average volume is only 35,000 for this particular ETF, but holy cow, there was a lot of buying on that day on the 24th for whatever reason. So it looks like institutions are starting to accumulate this. So therefore, we might get some upside from this over time. So in short, when I'm looking for opportunities to get into stocks, we're not seeing a lot today, and that's okay. I mean, we're not seeing the most bullish market at the moment. But once I go through this list, if I can find something that looks like what I want, has the right picture. This is bearish, of course, but if it's got the right picture, if I see institutions are buying in, then I want to jump on that while the getting is good. And it does also say a lot that the some of the better performers we're seeing in the ETFs, where we're seeing large amounts of institutional activity, are actually bearish. So that says a lot about what to think about the markets. These are, for those who don't know, these are inverse ETFs, so they make money if the markets go down. So if those are rising and you see more buyers coming in, that means two things. It means that people are expecting downside, and they might be either doing it to take advantage of it or to offset their risk in their portfolios that they have, for buys. So either way, it's bearish. So that kind of confirms we already know that the markets are inclined to go down.
All right, cool. So that's an awesome feature. I'm definitely going to add that into my daily queue of scanning things. And
Hmm.
so, highly encourage anybody watching, listening for the first time. If you want to test drive the software for yourself, feel free to hit that link in the chat, sign up. If you want to walk through, reach out to Mike and the team at Madison, and they'll hook it up. Otherwise, I feel like I'm just going to be keeping an eye on this inflation news tomorrow, and enjoy the summer doldrums as they call it. Mike, any final words going into this midweek of trading?
Not much. I mean, we got that PCE data coming up tomorrow, and then other than that, it's pretty much going to be a smooth selling week. Obviously, the holidays coming up. ISM manufacturing is on July the 1st. That is a big deal, so that we could expect some impact from that. But going into a long weekend, I think mostly everything's going to be settled up before Friday, as far as what people are expecting. So we'll still get some impact Friday morning from ISM, but then that's it. So after that point, folks, just enjoy the weekend. Come back to it on Tuesday, see where we're at.
Yeah, we'll see what that number looks like tomorrow. If it's in line, maybe we won't see much action going into the weekend, and everyone can have a cool, calm, uh, solid Fourth of July weekend. Maybe gas prices will go down too. Who knows?
Maybe.
We'll see.
That'd be hopeful. Yep.
All right, everyone. Thanks for tuning in. If you enjoyed the broadcast, hit that follow, hit that like, hit that subscribe button, and we'll catch you guys next week. Adios.